Thank you for watching module number 7. This module is on married borrowers and repayment. Now, a reminder with the federal repayment plans, if you are using a time-driven repayment plan, either the standard 10-year or the extended 25-year plan, your marital and tax filing status has absolutely nothing to do with the payment calculation. So again, time-driven plan, marital status has nothing to do with the calculation of payments. But with income-driven repayment plans like pay and repay, marital and tax filing status may impact the calculation of your payments depending on the plan that you choose. Now, in module number 6, you should have seen this comparison chart, and we're not going to go through the whole thing again. We simply want to highlight spousal income and keep it simple. Under both plans, pay and repay, if you're married filing jointly, you're filing a joint tax return. Spousal income is going to be counted. But if you need to exclude spousal income from the payment calculation, you're going to need to file a separate tax return, and you're going to need to use pay as you earn. So here it is again. Keep it simple, folks. If you're married filing jointly, spousal income is going to be counted under either plan, pay or repay. By the way, note that spousal federal student loan debt is factored into the payment calculation anytime spousal income is being used in the calculation of your monthly payment. Now, it's not dollar for dollar. So, for example, if your spouse is making $50,000 and he or she has $50,000 in student loan debt, it's not a complete wash as though they had no income at all. But federal student loan debt of a spouse is factored into the payment calculation, and that can help keep the payment calculation down depending on how much they've borrowed. Repay always counts spousal income. We've already referenced that. And the only way to exclude spousal income from the payment calculation is to file a separate tax return and use pay as you earn. So perhaps the obvious question is, how do you go in and calculate or estimate the impact of spousal income on your monthly payments under these plans? We'll go to the loan simulator. It's at studentaid.gov/loan-simulator. You see the website there. And when you go into the website and you upload your debt or download your debt right into the calculator, you'll see a section on personal information. And in the drop-down box, the first time you run the calculation, just put married filing jointly and put your spouse's income and their federal debt if they have any federal student loan debt, and look at the payment calculation under both plans. And then go right back and do it married filing separately, and you'll see the impact of excluding spousal income on your monthly payment calculation with pay as you earn. Very simple to do, and we'd encourage you to do that before you make your decision about which repayment plan you're going to choose. We hope the information in this module has been helpful to you. This is the end of module number 7. Once again, if you have questions about loans or financial aid, contact the Penn Student Financial Services Office. And if you have questions about general money management, please contact Financial Wellness at Penn.